Okay. So guys, we're going to start with the basics of divergence. What is divergence? Divergence is basically when the price is going in one direction. So let's say it's going up and you have your indicator that is going in the opposite direction. So it's going down, literally in the complete opposite for the two. The two main indicators that are used for divergence are the RSI and or the MACD. So let's say price is going down and your RSI is going up. That is divergence. What we're going to go through on this call is the different kinds of divergence, how you can use it, and how you can apply it into a incredible strategy where your stop loss could be as small as 5 pips. I'm not joking. 5 pips could be your stop loss from your entry point. So we're going to go through all of that. To begin with, we're going to go through our cheat sheets and how to identify different kinds of divergence. So I'm going to go ahead and share my screen. And we're going to get to work. Guys, at any time that you're not sure about anything, please unmute and let me know. Okay, so guys, there are 3 kinds of divergence, and I'm pretty sure y'all can see my screen. Yes, there are 3 kinds of divergence I want you guys to make note of. The first one is called regular divergence. The second is called hidden divergence. And the third is called exaggerated. We're going to go through examples for each one of these. We're going to look at the charts and we're going to find these different kinds of divergence. I just want you guys to be able to identify them and understand what is hidden versus regular versus exaggerated. Don't worry. Okay, so let's start with the regular divergence, guys. We have for each of these divergence, you're going to have a bearish kind and you're going to have a bullish kind. So let's pay attention to this first part over here. We have regular divergence. Sorry, I can't zoom in properly, but we have regular divergence, and basically regular bearish divergence happens when price is going up and then your indicator is going down. When this happens, you want to look for basically with regular divergence, you're looking for reversal patterns in the market. So when you see this happening, you're looking for price to be reversing and perhaps going for a sell. Now let's look over to regular divergence for the bullish side. So basically you have price going down and you have the indicator going up. Like I said, regular divergence, you're looking for reversal points in the market. So when this is happening, you're looking for buys at this point. Is this unclear to anyone? Would you like me to go over it one more time? Feel free to unmute or just drop it in the chat. If we're good, I'm going to go over hidden divergence. And guys, this will make a whole lot more sense once we start looking at the charts and you can actually put the image to all of this. Okay, I got one good. I'm going to go with that. Awesome. So guys, we did regular divergence. Now let's talk about hidden divergence. I know you're looking at this sheet and you're like, whoa, everything kind of looks all the same. I know it does, but it actually isn't. There's actually a difference between each one of these and they actually do different things. So for hidden divergence, let's look at the bearish hidden divergence. So that's this one over here. You basically have price going down and then you have the indicator going up. Pay attention to the lines where the lines are. So you have price going down and you have the indicator going up. I want you to make note for hidden divergence. This normally indicates a continuation in the trend. So I'll say it again. Hidden divergence, you're looking for a continuation in the trend. This is the bearish hidden divergence that we're looking at. Now let's look at the bullish. You basically have price going up and then you have the indicator coming down. If anyone would like me to repeat it, please let me know and I'd be more than happy to do so. Otherwise, we're going to continue with the last one and then we're going to finally get on the charts and we're going to make this all make sense. Good? Cool. Now let's look at exaggerated divergence. So exaggerated divergence is basically where you have price that is forming a double top or a double bottom. So let's pay attention to specifically the bearish exaggerated divergence. So for this one, you normally have a double top for price. Now, when you have this double top, you'll notice that your indicator is actually going down. This is a bearish exaggerated divergence. Now, let's look at the bullish exaggerated divergence. This normally happens when you have a double bottom. When this happens, you'll notice that your indicator is going up. If anyone would like me to repeat anything out of the 3 different divergence, please let me know. Good to go on to the charts? Okay, awesome. So I'm going to quickly go over everything one last time what each of these different divergence mean. We have regular divergence when price and the indicator are going in the completely opposite direction, and this normally suggests a trend reversal. Then we have hidden divergence where you still have price and the indicator going in the opposite direction, but this normally suggests a trend continuation. And then finally, you have the exaggerated divergence. And this basically gives traders the opportunity or just kind of a clue that the market is basically exhausted at this point. This is when the sellers are exhausted and in a flat bottom. So you have your double bottom, and price basically is trying to move up. Or when the buyers are exhausted and you have a double top and price is trying to move down. So we have our 3 different divergence. Let's get onto the charts. Give me just a quick moment. I'm going to stop sharing this one, start sharing this one, and we're going to look at some stuff. I want you guys in the chat I want somebody to drop a currency pair. I don't care which one, any currency pair.
Euro USD.
I heard Euro USD, I think. Yes, Leon? You can either unmute or you can type it in.
Can you hear me?
Yeah, I can.
All right. So basically, with these 3 types of divergences, do any of them actually carry more strength than each other, or are they are they of same strength and so forth?
I would say that they're, for the most part, about the same strength. It just depends on what you're looking at the market. And where you catch it. The really important thing about divergence, or at least with this strategy, is where you're catching it, and that ultimately determines the strength of it. If you're missing it, even by a few candles, well, that weakens the whole strength of that call or that setup that you've seen. If you're catching it right from the very peak, well, you're going to have a strong entry and then a strong trade going forward. Make sense? Got you. Cool. Okay, guys, we're going to look at, I think somebody said Euro USD. Okay, cool. So I have my chart here. Sorry guys, I'm gonna take this off. So I have my chart here. I have my indicator here, which is basically my RSI. Now guys, divergence can be used on any single time frame. You can start from the highest time frame, you can go to the smallest time frame, it doesn't matter. Now, one thing I want you to keep in mind, if you're starting from the higher time frame, well, you're looking for bigger moves. Bigger moves equals bigger pips equals more money for the most part. However, when you're finding these moves on a smaller time frame, depending on your entry, you could capitalize on just a few pips and really up your lot size because of that. So we're going to show you how to identify different kinds of divergence. And then once we're all done, we're going to finally show you the incredible divergence strategy that makes you a whole lot of money. So what I want to do here before I even say anything, I want you guys, based on the cheat sheet that you guys should have already downloaded, if you haven't, It's in the chat. I want you guys to refer to that cheat sheet. And I want anyone at all to unmute their mics and tell me where they see a possible divergence. And we're going to go ahead and we're going to mark it up. Guys, there's no right, there's no wrong answer. We're all here to learn. We're going to grow together when it comes to this. So I want you guys to see on my chart right now, where do you see divergence? Or where do you think you see it? Let's mark it up. Anybody? Remember, you're looking for price to go in one direction and you're looking for the indicator to go in a complete opposite direction.
I found one.
Okay, Reese, can you request access?
Sure. Let's request remote control.
Okay.
Click to start remote control. View options. Hold on for a minute. Okay. All right. Do I? Ooh, hold on. Perfect. Right here. Where is trend line? Right. So remember when we're doing divergence, we want to look at the peaks lining up from not just from the candlesticks, but also with the oscillator. So we have the RSI on, huh?
That was an easy one.
It is, Jay. She didn't say how it has to be complicated. Like she just said,
I didn't make rules.
divergence. I'm like, I bet. Right? And then we have lower point and then the higher point on the RSI. And then we have a higher point and then a lower point with the candles, right?
Another one represented Teresa.
You also, yeah. Listen, we were on a call. Remember that divergence call I asked if anybody wanted to hop onto?
Yeah.
And the guy that was teaching it, Sonny, had like lines back, forth, up, down, like
Yeah.
you're seeing multiple areas of divergence. And the thing is, like you can be in buys and sells at the same time and like just cash out as you know the next entries come, right?
Okay,
Right here.
I'm sorry, Reese. I'm gonna take control and I'm
sure.
going to, whoops.
Take it and then I can have my mouse back.
Okay.
Good.
And I want to show you guys something. Now, I don't want anyone to tell me what kind of divergence is, not as yet. Okay, give me 1 second. I want you to do something. I'm gonna share my entire screen so we can do this side by side. Okay, guys. So Reese went ahead. She marked up divergence. What I want you guys to do now, based on what she's marked up and based off of our cheat sheet, I want you guys to drop in the chat or unmute yourself. What kind of divergence do we have here?
Go ahead.
It's a bearish hidden divergence.
Bearish hidden divergence. Does anyone agree or disagree with Dom?
Yep,
I
agree.
agree.
Okay, we got agrees. Anyone disagree? Okay, let's break this down. Why did she say hidden divergence? So if you remember, she said bearish hidden divergence. So for hidden divergence, you basically want price to be going down and you want the indicators to be going up. You're connecting basically a lower high with another lower high. So that's exactly what Reese did over here. And then what you want to do, you want to match that up directly, vertically onto the indicator that you're using. So in this case, we have the RSI. Best way to do this, guys, please use a vertical line. You need to be accurate with this, and you'll see why towards the end of the call. So she connected it from this point to this point. It's obviously going down, but look at your indicator, it's actually going up. This is a bearish hidden divergence. So way to go, Reese. But guys, we got lots more on this charts. Who can tell me another divergence?
Go ahead,
You're
speak.
right.
Speak.
Oh.
Which one? No.
Oh.
No, don't.
He can take access.
Telling you speak.
There's one right to the right of it.
To the
Okay,
right.
to the right.
Where?
Yeah. Right there. Right there. Yeah. Down.
Oh, I see
You
it.
see it?
I see it. I see it.
Okay, why don't you just request access? There.
We should mark it up.
His laugh kills me.
All right, bet. So we got trend line
Oh my god.
from here
Yeah.
to here,
Right there. Yeah.
and then we got it again from here
Right there. Yeah.
to here.
Yes, soldier boy.
Right
Yes, soldier boy.
there.
Like,
All right.
right there.
And then remember when you're doing your divergence, you always want to align it with the horizontal line as well. And then one more time. Well, right?
Perfect. Okay. So one thing I just want to correct over here. You want to make sure you're connecting, or at least this is what I've been taught and what I've noticed. You want to make sure you're connecting. It's normally from bull to bull or bear to bear.
Ooh, that's a gem. Thank you.
Okay. And also depending where you're connecting. Okay, let me move this line. So we're connecting at this bullish candle over here. We want to make sure our vertical line is right over there. And you can see without even the vertical line, that's exactly where that peak on the RSI starts. So even though it was connected on this bearish candle, if you trail it down, that's actually not where the peak is. The peak is right before, right on that bullish candle. So go bull to bull or bear to bear. And guys, this is another hidden divergence. Perfect. Awesome. Okay, I need more people. Who else can see divergence on here? And the best thing when you're doing this, you don't want to zoom in. You're not going to see accurate readings off of your indicators at the bottom. You want to zoom out. Not completely, but enough where you can see all these squiggly stuff. Who sees divergence?
Go ahead, Pop.
I think I saw another.
Where?
So your crosshair is this?
Mm-hmm.
Go to your left.
To the left.
Yeah. Over more. Over. Stop. Go back.
Oh, I see it. I see it now. Yeah, I see it.
Okay, stop.
Do you want to request again?
Yes, please.
So from point, you said from point to point, right?
Yeah.
Bull to bull. From this one, and this one. Trend line from this point as well. Oops. I used the wrong one.
Wow, guys, we got 14 people on this call. Holy
So I
smokes.
was like, yeah, we're locked in today, guys.
Oh my God, guys.
Out of the
I
17, we got
know.
14. We're locked.
Wow, welcome everybody.
There we go. And then we got vertical line.
Man, I'm blown. Y'all really plugged in. I appreciate y'all.
Yo, I sent it to your girl, you know.
And then
Yeah, perfect. Okay, awesome.
Oh, okay.
So what I'm going to do, guys, I'm going to put the cheat sheet right beside it, and I want you guys to tell me what kind of divergence this is. What kind of divergence did Pop spot out here?
Regular.
What kind of regular? Bullish or bearish?
Bears.
You got it. Bearish regular divergence. Way to go. Awesome. Is anyone confused at all of what we're doing so far? If you are, unmute your mic. If not, I want somebody else to find another divergence. Divergence is a thing that you have to train your eyes on. It's not something you're going to get overnight, but the simplicity, people overcomplicate too much. Who sees divergence? Whoops. Anybody?
Hello?
Marla?
Can you hear me?
Yeah, I can.
Okay, but yeah, I got a question.
Yeah, go for it.
What's the difference between regular and exaggerated? Because they look the same.
Okay, so with regular, so take a look at regular here. You have basically for regular bearish, you have price going up. It's an obvious uptrend. Price is going up, and then your indicator is going down. Now let's look at regular still, but we're looking at the bullish side. You have an obvious downtrend, and then your indicator is going up. So with both the price and the indicator, they're always going to do the complete opposite of each other. Excuse me. Now with exaggerated, you're not going to have an obvious uptrend or a downtrend. You're actually going to have just a double top or a double bottom. So you're going to have 2 points that are, okay, this looked like one. So I'm going to show you, just for example, I'm going to put a line right here. Basically, in an exaggerated one, you're looking for double top. So you're 2 points in price where they have the same high, basically. But on your indicator, they're showing an obvious downtrend. Now, that is basically an exaggerated divergence. Now, this is just this one here, which is the bearish one. And the bullish one would be 2 points at the bottom that are at the same price. So they're forming basically like a W. But you obviously see the divergence going up. So in this case with exaggerated, you don't necessarily have price and the indicator doing the opposite. You'll have price at a constant, forming either that double top, so like that M, or forming that double bottom, which is a W. But you'll definitely see the indicator going up or down. Does that make a little bit more sense?
Yeah, I got you.
Okay, cool. Has anyone found another divergence?
Yeah, so we saw one.
Oh, y'all are over there planning, hey? Okay.
Yeah.
All right, go ahead.
Where did it go? Oh my goodness.
Sorry, did I move something?
Yeah.
Maybe.
Oh, okay. Let me hold on.
Oh, there's one here.
Reese.
Oh,
Oh,
Y'all sound like you're playing I don't know, like a mystery game.
Yeah. All right, where am I going, guys?
Here.
yes.
Here?
I'm just
This
gonna
one, right?
request- Oh, sure. Yeah.
Oh, I got Dom requesting access too.
Hold on, let me I just want to see. Because this is okay. So this is a lesson because I don't actually think. Hold on. I don't actually think this is divergence. So let me explain why.
There you go.
And Mel, you can correct me if anything. Because although this probably could be like an exaggerated for like a continuation for the uptrend,
Yeah.
I don't know. But with or is this like lower? Are we looking at equal
It's
highs
lower.
or is it lower? Well, if you want to count it as lower, then I guess.
Huh?
Okay.
Don't matter how slight the angle is, even if it's a touch lower, crooked, that's still divergence.
I got you. So then this is a hidden wow.
Here, let's put it up.
Wouldn't be
It pops.
Hmm?
My trade went through.
What's that?
My trade went through.
What are we looking at, guys? What do we got marked up on the chart there?
because so if we have this is a higher high than here, this is a lower high.
Mm-hmm.
And then you have a lower low and then a higher, what is this? Sorry, a lower high, then a higher high here.
Don't overcomplicate it. Look at the picture on the cheat sheet and match it up to that exactly.
So it's showing it looks like a
hidden.
hidden, but it's not doing it, if that makes sense.
Yeah.
It's not hiding.
But keep in mind.
But see,
First
the
one.
line would have to be the line would have to be underneath here if it was the
Okay.
bullish divergence, right? But the points are at the top, so it's showing a bearish.
Yeah.
But then the thing is, And this is actually a perfect point to put this in because I just wrote it down. Sani had said yesterday, if a trade hits your stop loss, because essentially you would want to put your stop loss right above that second point, right? So he said if your trade hits your stop loss and it wasn't a true divergence, because you can get, you know, because at the end of the day,
Hey, wait. Stop. Hold that gem until the end of the call. Let's not crowd over their minds too much.
all right, my bad.
Okay, guys. So we're just looking at identifying the different structure of divergence. So what Reese is talking about, we're going to clarify that part at the very end. Dom, you have control?
I muted it. My bad. Sorry. She was over here like, yay.
Talking through your laptop now?
Well, because mine has the sound, so you don't want it echoing. So you just leave the one mic open, and then whoever needs to talk, just talk.
That's sick how you thought about that.
Because then it doesn't make sense for everybody to be turning their sounds on and off.
I love it. Guys, what kind of divergence? Sorry, I'm trying to take a whoop.
It's not very accurate.
Zoom in.
She's turning into me. Sorry.
Wait, was this it? Now I forgot which one it was.
Yeah, that was it.
Okay, I just.
What kind of divergence do we have here? So Marlon says regular.
Where's the
This
chart?
is
Where's the chart?
from-
I thought we're using the chart.
The charts are, well, do you have
Well, you guys should have the charts on your phone or a laptop.
It's open up here on the phone? Oh, it's maybe.
Oh, is that the
Make sure you save this. There's no shame in using these because I still use it.
Oh,
I
I?
didn't think there was any change. You know, I think we have it.
So what do we got in the chat? We got bearish, regular. So everybody's saying regular. Does anyone disagree?
Regular bearish. This one, right?
Mm.
We all say regular bearish over here.
That is awesome. That is regular bearish. And I'm actually gonna make I'm gonna actually save this one because I want to come back to it. And Reese, I think you know why. Okay, cool. Anybody else see divergence?
Right there, rocket ship.
She's coming back to it. She just said that. Pay attention.
Key, Christian, hey Cornell. How are y'all doing? Do you guys see anything? Cornell is in here.
Wow, long time.
Alex, how are you guys doing? Are you seeing anything? Do you want clarification on certain ones that anyone did? What kind of divergence are you guys seeing? And I'm actually gonna go up on an even higher time frame. Sorry guys. If you found something, tell me, I'll go back. But who sees divergence? I'm still trying to take it all in. I got off work in half an hour. That's okay. This is just the basics. So Christian, just to fill you in what we've gone through already, I literally just went through the cheat sheet. That's it. And everyone has it. Okay, no problem. So I just went over the cheat sheet and just literally explained these. If you guys want to make note, regular divergence, when you see regular divergence, it basically shows price going in one direction and the indicator going in the opposite direction. When you have regular divergence, take this as a suggestion that price is going to reverse. You're looking for a trend reversal in the market. Hidden divergence, you still have opposite movements within the price and the indicator, but with hidden divergence, you're looking for a trend continuation. So again, regular divergence is suggesting trend reversal. Hidden divergence is suggesting trend continuation. Now, what happens to exaggerated divergence? You're going to see these double top or the double bottom forming in price, and you'll see your indicator doing a downtrend for that double top or an uptrend for that double bottom. When you have exaggerated divergence, it's basically giving traders the opportunity or the idea that basically the market is exhausted. So when the sellers are basically exhausted, you'll see this flat bottom over here, and you're basically looking for price to move up. When the buyers are exhausted, you're going to see this double top and you're looking for price to go down. That's all we've gone through, and all we're working on right now is just looking at the chart and seeing where we see divergence. Has anyone else found divergence?
I think I see a regular bullish
Oh,
divergence.
cool. Are you on your phone or your laptop?
I'm on my phone, but right
Oh,
where your cursor is at is right
yeah.
above that, I think. Yeah, right above that. If I'm looking at it
Oh,
correctly.
okay. I see it.
Yeah.
Ah, sugar. Okay. Perfect. So guys, remember I told you it doesn't matter how slight the angle is. This is still a divergence, but who can tell me what kind of a divergence this is?
Mike's open.
That'd be regular bullish, right?
This will be regular bearish.
Oh, because it's reversed. Oh, I see. Okay,
Mhm.
I got it. All right, it's reversed into. Okay,
And you
yeah.
remember, regular divergence, we're looking for trend reversals. So what happens? Price is going up, whether
it
this be a pullback or whatever, this is a reversal still. So
Gotcha.
just to see, let's see. Guys, keep in mind we're on the 4 hour, okay? That's 200 something pips. Now, when we get into the real styles, you guys are going to really laugh, okay? Anyone else see divergence over here? Any divergence, anything at all? This is something you have to train your eyes on. But guys, I promise you, once you get divergence down, it's a complete game changer. And did I mention you can use it on indices? What else we got? Nobody? We're all stumped?
Oh, sorry, we're having a whole discussion over here. Talk,
Oh,
talk,
sugar.
talk.
I said stay on mute. I want to hear y'all. Y'all speak.
Sometimes I feel like we kind of trail off whole time. Okay, talk.
Talking right next to it.
Here?
Yeah.
But where do you see it? Because this is a high. Hold on, let me.
Yeah.
Like it. Y'all can understand what I'm trying to explain.
Oh, I see what you're saying.
You see what I'm saying, right? Cool. So they're looking at it from
Okay,
here,
please
from
this
this
one.
point to this point. Here?
No. Back. You're back.
Here.
Yeah.
Okay, so my thing is this is a high point to a lower point, and then here is a high point to a lower point.
Yeah, Kate, I will pull it up and you can show us where you see that one.
So it's not a divergence because both price and us, the oscillators, are going in the same direction. You see what I'm saying? Remember, does that make sense?
There's no way on trying to make that look nice. If they're going in the same direction, it's not a divergence.
Right. Because this is a high point to a low point, and then this is also a high point to a low point right here.
Okay.
Make sense?
Yeah.
Cool. All right. Who else? Who's got? I think he has one.
Yes, she does. Okay, if you're on your phone, just unmute and guide us through where you see it.
Okay. Ooh, I knew that wasn't gonna work. Let me mute. Sorry.
It's okay.
Can you guys hear me?
Yeah.
Okay. The one I see. Oh, I'm trying to move the screen. Okay, so it's kind of at the bottom. The left, yeah, that area right there.
You on your phone or your laptop?
I'm on my laptop.
Oh, okay. So can you request access through the Zoom bar at the top? What do you guys press at the top? I forget.
Oh, go to view option, and then you want to go down to request remote control.
There we go. Awesome. Okay, you have control now.
Okay. So okay. I see it right here. Oh, I have full control. Okay.
You got the whole thing over there.
This area right here. Sorry, y'all. Okay. computer's kind of tripping, but this area.
Okay, use a trend line and mark it up.
It's really like my first time learning about
okay.
divergence. So
There's half of the people on this call have never done divergence, so you're not the only one.
okay.
It's like a word search. Yes, that's what I was trying to say. You're trying to find the words. I was trying to figure out what I could possibly relate this to. That's perfect, Leon.
But yeah. What would I call this one? I was trying to go back to the
No problem. Here.
okay.
Okay, let me move it over here.
Okay. So would this one be a bearish as well? I mean bullish? No, hold on, let me see.
Guys, help Kia. What is she looking at?
Hidden
Because
divergence?
what you got there?
Point to me show again. So hold on, she's at the top here.
Yeah, but look at the bottom.
Look at the bottom.
I see hidden, but I'm not sure.
Oh, wait. I think I see it. I see it. You got to mark it up from the bottom. So right in the middle of where you have that top line. Yeah. Over a little bit more to the bottom side. No. Bring your
Go left. Keep going.
Oh, right here.
Is that where you're saying, Reese?
No, hold on.
Oh, I see that too.
How deep are Pop, how deep are you looking? Because now you're confusing me. I thought I had it, and now you're like, no, wait, deep.
No,
Oh, sorry, my bad.
Go back to the right.
Go back to the right, and then drop it underneath the candles, right?
And then look at the bottom one. Why is it going down so low?
What do you mean? Exaggerated. Yeah, I think it's the exaggerated one at the bottom. The W. Look at the W before that uptrend. Yeah. So okay, put back that side of the trend line. Pick up the other half of the trend line, the other side. Draw it to the right and drop it. Come back over to the left. Come back over to the left. Stop. And now go to the
Go down a little bit.
Go under. Go
There
under
we go.
now. Go under.
The bottom.
To the bottom of where that down.
Really
No. Yes. Right there. Now underneath it. Drop it underneath. Underneath it. Yes. That point.
Okay.
Okay. Now grab.
It's not as easy as it look, guys.
You gotta really now grab the other side and put it at the bottom on the left side of the W. You see the W?
Yeah.
Okay.
This W?
No. Bring it back over to the right. It's small. The previous low point. The previous low point from where the second point is. To the right. Yeah. Over a little bit more.
Because you gotta line up your bullish candle with your bullish candles and your bearish candle with your bearish candle.
Yeah.
There you go. So essentially that works, right? And then you're gonna take a trend line again. We'll leave it there. Take a trend line again and go to your RSI and go to the bottom at the same exact point of where you drew the top one and connect the bottom points. From there, and then
oh my gosh.
Yeah, right there's good. Now with the line up with the bearish candle, the bullish candle, the blue candle.
Bring it lower. Line it up with where your other point is. Yeah. Because then you want to take a vertical line and connect them. There you go. On the bottom. Yeah. There you go.
Beautiful. Okay, let's pull up this cheat sheet real quick.
There you go.
Okay.
What are we looking at, guys?
It's very subtle, right?
Where the hell are you?
You didn't see it?
No.
Yeah, that's the bullish. That's the bullish exaggerated, isn't it?
Yeah. That's what it looks like.
Now this one makes me scratch my head. I'm not gonna lie, because technically the RSI should be going up.
Okay, can I take control real quick?
Mm-hmm.
Reese.
Yo.
Looks like
Yeah.
the slight hidden divergence
No,
bullish.
Yeah. That's what I'm looking at.
Slight hidden divergence bullish.
That's what I'm looking at right here. You put that there.
Where's the cheat sheet?
Oh, not there. I lied.
I sent it in PMG as well.
All of y'all should have the cheat sheet on your phone, eh?
Max, I sent it in PMG. Oh, I didn't. Also,
Madame, can you put the cheat sheet?
huh?
Oh, geez.
I sent it in PMG. You guys should have it.
The low is 1, 2, 5.
You've been having it, Daddy.
This is 1, 2.
I want to see them.
Okay,
You know what it is.
so to be honest, this point is higher. Let me zoom in. Ooh, no, wait. Hold
The other way. Go
Right,
left.
You have a PC, right?
Yeah,
Okay, that's
I
fine.
think.
Hold on. Oh no, come back. Wait. I want to zoom
Reese, hang on. Okay, continue. It's okay.
The money lab right there. Not a lot of people
Guys, anyone that was on the first divergence call, this is the same exact pair we marked up before.
Is it really?
Oh, really?
Oh,
Yeah.
oh, wow.
Oh, wow.
It's right here.
Wow.
It's
Okay.
right here.
Where?
That's
It's
hilarious.
right here.
Are you serious?
This is what we did on the last one.
Yeah.
Guys, I cannot wait to blow your mind. Okay, go ahead.
So I cannot wait to blow your mind. Okay.
Don't go left, Reese.
I'm trying. I'm really trying, I promise. Okay, so what I'm trying to say is, okay, so let's just say we use this point right here. I'm trying to like scale up so we can.
Yeah, Cornell, you definitely need to train your eyes. It's not just you. It's divergence is something where you just got to keep it on repetition all the time.
All right, cool. So if you're going to go from point to point, and that's why it's very important to have the vertical lines, right? So if you're going to go from, are you done with
So much
that?
noise.
Sorry.
Thank you. So if you're going to go from point, this is 1 point, right? Then you have the wick for this one is this still isn't doing what I want it to do. You know what? I don't know about this one anymore, guys. I
Then
really
it's not
tried.
divergence.
It's-
Guys,
Go ahead.
we're gonna not complicate this one. Sometimes you don't win every time.
Yeah.
You simply don't win. You may think you have it and you can justify it. Sometimes I spent time on looking at a setup, and no matter what way I put it, it just wasn't divergence. And you don't want to chase the market in that sense. Wait till you see something so obvious where if you pull up your cheat sheet, you're going to see that exact pattern. So what we're going to do now, if you guys are good at understanding, like I said, you got to train your eyes for this, but if you guys are good at understanding the different kinds of divergence, can you guys, patience, yeah, that's the thing. If we're good to go on, let me know. If you'd like me to go over anything before we do move on to the next part, let me know right now. Anything you want me to go over one more time? Or are we good to move on to the saucier part?
Can you go over hidden one more time?
Yeah, definitely. So hidden, let's see if we can find one. Okay, here. Okay, so let's look at hidden one more time. So basically, we have price for the bearish hidden divergence. We have price obviously going in a downtrend, and then you have your RSI doing the complete opposite, and instead it's going up. Now, if we're looking at the bullish side, excuse me, you have price obviously going up in an uptrend, and then you have the RSI or your indicator doing the complete opposite and going down. Now, let's look at where we can see this in the market. Now, if you guys see right over here, we have a high point and then we have a lower high. So we've connected those points. And maybe to some, this might not even look like a downward line, but it actually is. If you line up your cursor, you can see that dotted line. It does not align with that trend line. This is going in a downtrend once you connect the points. So let's look over here back to the cheat sheet. We have hidden divergence. I'm specifically looking at the bearish side. So we have price going down, which is what we have in this markup over here. And what we need for this to actually be a hidden divergence for the bearish side is we need the RSI to be going up. Now, if we look right below it, if we put our vertical lines, right over here, we can clearly see that the RSI is moving in an uptrend. When you have them doing the complete opposite, and it looks exactly like this, this is what the hidden divergence is. Now guys, I'm not going to come up here and do this training and say, yeah, I can visually spot out every single divergence and I can name it off the top of my head. No, every time I'm on the charts, you best believe I have this sheet pulled up. There is no shame in using this. I'd be lying to you guys if I said I can spot everything by just my eye. Yeah, I can spot it, but I can't tell you the name. At least not yet, not until I practice more. So when you're doing this, you can see the obvious divergence here and there, but please use your cheat sheet so you can do the actual comparison and see, okay, is this actually regular or is this hidden? Does that make a little bit more sense, Christian?
Yeah, I got it. I can see it.
Okay, cool. Leon said regular and hidden are basically, yeah, okay. So with divergence, you have the price going one way, you have the indicator going the opposite way. So that's one part where they're doing the opposite side. Now, when we're comparing regular and hidden to each other, they're basically the opposite in that sense. So guys, this is divergence, and like Reese says, it's different in the live market, but you just got to train your eyes. And I promise you, if you continue doing it every time you're on the chart every day, train your eyes to challenge yourself. Can I find 5 divergence today? Whether you're using the divergence strategy or not. Now what I'm going to do, guys, we're going to show you the divergence strategy. I cannot wait. Okay, let's get to it. For the sake of this, I'm gonna just go back a little bit to some of the markups. And guys, I'm super, super duper excited to show you guys this. Like, super excited. Okay. So let's take this one over here. And guys, please feel free to come off of mute, interrupt me, say something, anything. So can someone tell me what kind of divergence we have right here? First off, let's start with that. Who can tell me what divergence we have there?
Bearish regular.
Bearish regular, perfect. Okay, guys, when we are using divergence, we want to be very accurate when we're using this strategy. Exactly. So for bearish divergence, exactly what we see here, we're basically connecting a high to a higher high. Now, in regular divergence, that basically is indicating some kind of a trend reversal happening in the market. If we look here, we have that regular divergence and we notice this reversal happening, whether it's just a pullback, whether it's an actual big reversal, it doesn't matter. It's the price is still reversing in that sense. Now, with this strategy, guys, once you identify your divergence, in this case, we're connecting that bull to the bull. So our next candle we want to be looking for is that bearish candle. Once this bearish candle starts to form, we want to once you've identified your divergence, you want to enter in at this candle and you want to take this trade completely. So I'm just going to put some lines here for this to make sense. This is our entry. So you've identified already, okay, this is our regular divergence. Great. We're going to enter into that bearish, that bearish candle that comes out. Entry, great. Once you enter this trade, you just let that trade run completely. And believe me, if you have that divergence, that trade will not come back anytime soon to touch that area of where you entered. Now, here's the crazier part, guys. When you're entering these trades, you can set your stop loss at the very end of that wick you entered in. So I'm going to set my stop loss there. Depending on the wick, that wick may be 8 pip, 5 pips, maybe even 10 sometimes. That wick at the end of it, that's your stop loss. And look, price does not come back at all to touch that point, not for at least a couple days. Keep in mind, we're on the 4-hour chart. So if we entered this trade over here and we just let the trade run, that price did not come back and touch our stop loss. Now what I'm going to do, guys, I just want you to see how much we could have possibly gained from this one trade, whether you set certain TPs, whether you're just watching that trade naked. I'm going to show you how much pips you could have potentially caught off of this.
Talk to me nice, baby.
Let's go over here. So it's somewhere behind there.
Yeah, around 200 pips. 196 or 7 or something.
There we go.
Oh, 200.
Out, please. Out.
Sorry, that was so weird.
I see
Do you
divergence.
guys see? Do you guys see how much pips you could have caught just by identifying divergence?
Yeah.
190, let's just say 200 pips. You guys don't believe me? Okay, we'll do another one.
He said, you guys don't believe me? Okay, we'll do another one.
Okay?
She said, y'all think I'm lying? Watch this.
Okay, look over here. We're going to use right here. Okay? Bear to bear. Okay? Bear to bear. Going down. We got our RSI going up. First, let's figure out what kind of divergence this is. So, we have here a bullish regular divergence. If anyone disagrees with me, let me know. Remember, regular divergence suggests a trend reversal. What happens here? Reversal. So let's say we entered in at this, okay? Are you ready? I don't even know where the wick is. Okay, I'm going to move this line. Okay, let's say we entered here. I'll even go up a little bit.
That's not where the
Okay? This is entry. Let's just set our stop loss at the end of the wick. Stop loss. No, let me just focus on the price right here so y'all can see exactly what's happening. So we identified our divergence. Let's just say we got into this trade right over here. Oh, sugar, I gotta drag my screen down. It's still going.
I love it.
Sorry. She said, I love it. Ooh, oh, sugar. That was so cute.
You have to get
What else
excited
is there to
about
get
money.
excited about?
Guys, do you see what's on my screen?
Wow.
Yes, ma'am.
247 pips. Talk
Damn.
nice.
Can we keep going?
Okay, let's just stop. Let's pause. Okay, this is a dirty number. Let's just stop. Okay, let's do some quick maths. Let's just say 240 pips. Somebody drop a lot size.
0.05.
0.25. What's your favorite lot size? 0.87 or something? What is it?
0.71.
0.7.
What did you say?
You said 7.
0.71, 0.41. She's listen.
You didn't say point nothing. You said 7.
Oh, good standards.
Okay, let's do this. Okay,
0.50.
this is our lot size that we've used. We have just caught 240 pips.
Now, is that 0.5 lot size?
Yeah.
Dollars
Yeah,
per
$5
pip.
time. Yeah.
Okay.
So somebody tell me, I can't do the math. Somebody tell me what this equals to.
1,200. Ooh,
Seriously?
1,200.
Yeah. that I was playing.
Okay. Okay.
Yes, Christian.
Damn.
All right. Let's do a 0.02.
Which is 20 cents per pip.
Yep.
$48.
Okay. But guys, the thing with divergence, when you really spot a strong divergence, strong meaning you can clearly see this matches exactly what it looks like off of the cheat sheet, you can up it. You can up it. And I have done that safely because I've spotted that divergence. I can speak for many others too. Now, what I want you guys to do, let's just imagine for a moment. We've practiced our divergence. We've done it in demo. We've done it in live. We're working off of the 02. We built the account up. We're on the 01. We've done so many different things. I want you guys to tell me what does a standard look on this?
Nice.
Can we not?
Standard
Let's do it
1.0,
actually.
$10 per pip.
Because guys, this is the thing you can do with divergence.
2,400.
Is it?
Yeah.
$10 per pip.
Yeah,
You're
10,000.
beautiful.
Wow.
Hey, sing, yes.
That was a little crappy.
Yes.
Crying.
Y'all don't believe me? Let's do another one.
Oh, she said, y'all don't believe me?
Mel, we believe you.
Nah, I don't believe you. Show
We
me
believe.
again.
I don't. The money. What is it? Women lie, men lie, but
Numbers
what doesn't
don't.
lie?
Numbers
Thank you.
don't.
Numbers don't lie. Look at all of this.
But wait a minute.
Okay, let's I don't know what this. Okay. Let's stop right here.
That bottom.
Okay.
Stop.
Oh,
Don't do
gorgeous.
it. To them.
Okay. Guys, let's focus in on this area over here, okay? This one right here. This might be the last one, or we can do a few more after, depending on what you guys want. So let's look here. Somebody tell me what kind of divergence we got here. What are we looking at here?
Regular bullish.
Regular bullish. Perfect. Christian, you got it.
Jen.
Yo, good job, Christian.
I'm unmuted now. You can go ahead.
Regular bullish. Guys, remember, regular divergence, it indicates trend reversals. What's happening here? Good trend reversal. Let's calculate. Let's be adventurous. Let's say we got into this trade for a 0.05.
Whoa.
0.05. Okay. Let's measure up.
Wait for it. 50 cents a pip. That's already 100 and that's already 200 pips.
Keep going. Keep
Oh.
going.
There we go.
I say 500.
364.
Oh, no, I say 700.
Oh, she's gotta move the chart, guys.
I say
Hang on, guys. I gotta zoom out.
Come out, please.
Who made that?
The thing is too big.
Bruh. I say 700 pips. What's your bets? Put them in now. Oh,
850.
Too late.
LOL. 624.
Oh, I was close.
Okay. 0.05. Somebody do the math for me. 626. 0.05.
$312. That's it? No. Really?
$312. Somebody tell me what this looks like.
Yeah, I'm
626.
right.
300. Yeah, it is.
That sounds like a lot more.
I know, right? 50 cents.
What does the standard look on this, guys? Look like
Oh, 625. 625,000. Sorry, what? 6,250.
$6,250. Whoops.
That's a lot.
2060.
That was $10, bro.
Yeah.
60, yeah.
This is what really
Your
making
money
your money
has
work
never
for you.
worked harder for you in your life. What?
Guys,
That's the true stuff that
Your
never
money
come out of
went
your
from
mouth.
$10.
The 6,000.
Oh my God.
6,000.
And you know what you did? You pushed
Nothing.
the button, my nigga.
Copied
You
and
pushed the
button.
button, right?
I do have a question
you
though.
guys, yes, for sure.
So with this strategy, right, we place our stop loss at the wick, right, or the entry candle, basically, right? So
Yes.
with this strategy, do we just trail until we can't trail no more, or are we
You
setting
can
like
do that. You can do that. You can, depending on the time frame you're on, you can set different take profits. So let's say you're on the 1 hour, you can set your take profits at like 25 to 30 every so often and just wait until it gets there and then adjust, trail your stop loss from there. Or you can go in naked completely and then just be trailing it.
bet?
So guys, who can see a divergence here?
like to the right of your cursor,
Mm-hmm.
like right there.
Uh-huh.
So from there to the next high.
From there to the next high. From here, wow. From here to the next high.
And if you go down to the RSI, it looks like it's slight, but it looks like it's diverging just a little bit.
Oh yeah, slight is still divergence. Okay. Let's see. We have a bearish regular divergence. Guys, did anyone take in what time frame we're on, by the way? Does anyone remember me saying at the beginning of call this can be done on any time frame? Because it can.
Oh wait.
On any time frame.
So this is the 5 minute, guys. So just like if you were trading HFX, then you can literally find your trades like this.
Yeah, but which time frame did you do the other ones on?
Oh, what was the 600 pip?
4 hour.
4 hour. Yeah.
4 hours. So that was days. That's days.
That was, I think that one was a month. 26 weeks.
26 days. That's crazy.
The thing is, you could take
$10 in 26
but you
days
could take
became
partials.
$6,000.
You could take your partials, right? Or if you put in like a block size bigger than a 0.01, you have 0.02 and up, you can take partials and let it ride. So let's just say you have TP1. TP1 is going to be the previous low or the previous high, depending on if you entered for bullish or bearish, right? And then
Don't drink it all.
No, he said.
No, I wanted some.
Yo, everyone can hear what's going on.
I was totally in the middle of an explanation,
Yeah.
but never mind.
Sorry.
No, like
Continue. We were listening.
I
Bullish
don't
and
remember what I was
bearish.
talking about now. I was on my tea. It's okay.
Sorry, we were totally not muted. And Mel, sorry for our.
Sorry for the
No,
distraction.
that's cool. It was valuable information to others. So it's cool. Don't worry. Does anyone have any questions about anything so far? Nope. Everyone is good. Everyone understands how.
What'd you say?
What?
Like
Yeah.
it goes up and down like that, right?
Yeah.
Oh, okay.
Any questions? Anybody?
Yeah, we have two people thinking about joining with us today. So
That is awesome.
Yeah, we have
Guys, no
yes.
problem. Before you guys leave the call, I want to show you guys one thing. Okay? Hang on a second. I'm gonna show you guys one thing. Okay? And I just because I can't find it on the chart right now, but I'm gonna show you live examples of divergence. Reese, can you give me back host so I can share my screen or just enable it? Don't leave yet, guys. I want to show you one last thing. Reese, can you pass me host? You know what? I got it. It's okay.
Got it? Sorry.
Yeah, thank you. Okay, I'm going to show you guys something, okay? Let's see. Do you guys see what pair I'm on? Let's go back. Do you guys see the divergence? This was last week, I think. Yeah, this was last week. And this was me and the team trading with Kim and Lano, okay? They called out an SPX sell, I think. Or they called out a buy, a hit stop loss or something. Can you believe it if we told you guys that we watched this divergence happen right at this peak here? And we saw this.
My heart, guys, my heart. Was this the one?
This was the one.
Oh yeah. Oh.
This was the one where Gold Cup unfortunately stop loss hit.
Oh.
But if you were following Divergence,
Mel, can you measure out the pip count?
What do you mean?
It was like
yeah, I'm gonna go to the next picture. It's just off of Gem's chat.
It was a 700 or 900 pip drop that we got wicked out of. Yeah.
You got wicked out of?
Yeah, that's why I'm like my heart.
You got out of it?
We got wicked out. The stop loss was too tight.
I'm so sorry.
Yes. I remember
That's the one.
A
1,000
900
pips.
I didn't pay 1,000 pips.
1,000 pips. Look at it. It's circled.
Guys, it dropped. Okay, this was perfect divergence. It dropped, but we caught that buy right back up.
Oh, the buy was 1,000.
Who's we?
I was gonna say who's we.
Who's we?
Who's we?
I didn't catch that.
We joined this.
Ask her who's we. Ask her who's we.
Oh goodness! But guys, do you see what I'm saying?
Are you
guys?
Are you sanctioning? Like this is your
What?
Honestly.
I'm just looking to see if we have any other ones that I can show you guys right now.
Oh no. What time next week?
Sorry guys, give me a quick second. Let's just
What time from Beijing?
Huh?
look. This is what Ebony did one day in the morning, and this is on SPX as well. Look at this. This is live.
That's a beautiful. I think I remember that one too.
Yeah.
Listen, guys, doing divergence on the indices are like, yo, you're
sick.
You're catching sick pips, man.
Yeah.
Sick
Oh,
pips.
remember the homework, Ebony? You had a US 30. Wait, guys, I want to show you this. Don't leave. Hang on. Look at this. US 30. Okay.
On US 30 alone. Holy crap.
Look at this divergent, and it's on the 4-hour.
Oh wow.
You see what
That's
I'm
the
taking
4
away? That's a
hour.
4 hour?
Oh, how many pips was that?
I'm not sure. It was one of the homework ones.
Oh wow. Are there prices on that picture?
No, it's cut out. But guys, you see for yourself. I'm gonna stop sharing. You see for yourself what's happening with divergence. How do you use divergence live? So that same picture of the SPX where you saw it close up to the end of price, that you won't when it comes down to live trading with divergence, you're not always going to get a setup. It's easier to go back and find these examples, but when it comes to live, you really need to be patient. You thinking it looks like something but not actually being sure, that can cost you to lose the trade. And as Christian mentioned earlier, patience. You really need to be patient with this divergence stuff. And it really comes down to you just training your eyes and training your understanding on the different kinds of divergence. You don't want to make the mistake of thinking it's divergence when it was nothing at all.
Oh, I'm not. Oh my god, I'm so sorry, guys.
Does anyone have any questions at all?